Welcome back to the channel, guys. Today we will be going over top-down analysis and how you can frame your higher time frame bias on the monthly, weekly, and daily time frames, all the way down to your entry time frames, either the 4 hour, 1 hour, or 15 time frames. So as you can see here, we are on NZD USD on the monthly time frame, and if we just break down this price action to see what's going on, what is the current institutional order flow telling us? So first things first, I will mark this. We have a market structure shift or a break in market structure on the monthly time frame. And if we denote our range, we can see price pulled back into the top 30%, running buy side liquidity into the extreme bearish order block on the monthly time frame. After that happened, you can see we had a rather large displacement down. It's only one candle on the monthly time frame, but on the weekly and daily, you'll see this as a rather large displacement. And after we get this, we also see all of the bullish candles that get traded through hold price as bearish order blocks. You can see here we have bearish order block, all holding price. Once they get traded through, another one here, bearish order block on the monthly time frame. And in this instance, again, another one, we have a bearish order block. Oh, it's not buy side, that's a order block. So, first of all, just from this simple information, we can see that institutional order flow is currently supporting bearish price action. What would be a logical draw on liquidity? If I just tidy the charts up a little bit here, you can see price traded into this previous low, this previous wick, and bounced off the bottom, inducing typical retail traders into a double bottom to be buying and placing their stops below these equal lows, or other big fund traders. However, us as ICT traders and smart money concept guys, we can see this as a form of sell side liquidity and target these for a take profit. So I'll just denote this as sell side liquidity. So now we can drop down a time frame and see what's going on the weekly and daily time frames. Before we go into that, make sure you check the link in the description. It's my free Discord. I share with you guys all the trades I'm taking, all of my analysis, my key levels, my points of interest, why I'm looking at these areas, and how you guys can do this too. So jump in there, come and learn, and I hope to see you in there. So now dropping down to our weekly time frame. And if I just delete these, just to keep price nice and clean, as we're not working with these ranges at this moment in time, we can denote our current weekly range. You can either select this range or our even more most recent trading range, which would be this on our weekly time frame. As you can see again, we are respecting bearish order blocks, and we have a lovely run on buy side liquidity into this bearish order block, and then a rather large displacement to the downside, taking out a structural low, a significant structural low on the weekly time frame. So if I just delete this for the moment, because I would draw your attention down to this area of price action here, because as you can see, this is our last bearish order block that was traded and closed through on the weekly time frame. So this at the moment is our point of interest. If this gets taken, we can just have an alert on this high. We can drop back out to the monthly time frame to understand where they may be drawing price to, which they may want to bring price a little bit higher up into a monthly level before continuing the sell-off in line with institutional order flow towards these lows. So another little trick that I can tell you, which ICT himself mentioned, is if you are trading and you find yourself not necessarily on the wrong side of the market, but if your points of interest that you want to be trading from are being taken, i.e., you're taking a loss and they're failing, you want to just drop out to a higher time frame, just to make sure, one, that you are trading in line with current institutional order flow, and if there's any price action that you may be missing on a higher time frame, that they could be drawing price to before the continued either impulse or sell off. So this is our current range or current premium discount array on our weekly time frame. So we can drop down into a daily time frame and we can denote our current trading range on the daily time frame, which would be this high to this low. This high to this low is our current daily trading range. And you can see we have this rejection block here, coupled with this wick on the daily time frame, which does run buy side liquidity before displacing aggressively to the downside, giving us a break-in structure on the daily time frame, taking out a significant swing point in the market and closing outside. So this would be a high resistance liquidity run. If price were to come through here, it would need to be usually during a high impact news release, because it is a high resistance liquidity run, because it runs liquidity in and of itself. So we can be confident that if we are trading from this level, that we should be somewhat reasonably protected if we also have a weak structural point to target. As you can see here, we have sell side liquidity, which is also clean stacked lows on this time frame, which would give us our low resistance liquidity run. So this is our more short-term target on the daily and 4-hour time frame, opposed to our more longer-term targets on our monthly time frames down here. Also, what's good to notice is what may give resistance if you are in swing trades. For example, if you're taking sales from here, understand that on the weekly time frame, it's not the best positioned, and we do have a daily bullish order block below current price, where we could see some resistance and a potential pull up back into premium pricing for a continued sell off. So if you're trading out of this range here, I would just anticipate and take your profits either at this daily bullish order block, but you would certainly want to take something off the market when you do take out this swing low down here. So let me just take your attention to this wick. Now, why am I using the wick opposed to this daily bearish order block? Is because it's a rather large wick, which does run buy side liquidity, as you can see here, and the wick is considerably larger than the body of the candle, so it does hold some significance. And you can see price is currently not trading above the consequent encroachment, which would be the equilibrium point of this wick here. So this is also supporting our bias of a sell side market. Now let's drop down to the 4-hour time frame, and within this daily wick, we can see we have a 4-hour bearish order block. You see how we're stacking time frames together to build confluence. We're not just trading from a daily order block. We're trading from a daily wick, which is contained within that 4-hour order block. And I'll show you more as we drop down into the hourly and the 15-minute time frame as well. So now current price, we are trading within this 4-hour order block, which is from premium pricing, specifically the top 30% of the range. And you can see we have a run on buy side liquidity into this 4-hour order block. Now, I actually did take shorts from here. This was during FOMC, and I was expecting this to come and be the move that did take this low resistance liquidity run here. However, it did not. You know, nobody has a 100% strike rate, I would say. And price clearly wanted to seek buy side liquidity before that and squeeze out early short sellers. Yeah, so I did end up taking a partial loss. I did close 50% of my position at 5R, and I took a partial loss on the rest of the position. Now, Let's drop down into our 1 hour time frame after we've denoted our run on liquidity on the 4 hour time frame. And I'll just take your attention to this hourly bearish order block. And let's do something funky and denote the EQ of this 1 hour order block. These trades, by the way, I did share in my Discord. The guys in there caught the shorts with me. So if you do want to join, the link's in the description. And like I said, it's absolutely free. We caught the FOMC short on NZD USD. We also caught it on GBP USD. It was all forecasted in real time beforehand. So we are respecting the equilibrium point of this H1 order block. We have not breached the equilibrium point, and we have closed inside the range, this previous swing range, which is also giving us the reasonable assumption that we can probabilistically assume that this is in fact a run on buy side liquidity, squeezing out early short sellers before attacking sell side liquidity. Now, I hope that makes sense. I think I went through this rather quick. I do try to be very brief and efficient with my videos. If you did not understand anything or you would like me to cover something more in depth, please let me know in the comments or join my Discord and you can ask me in there and I'll be happy to do so. Thank you very much and I'll see you in the next one.